Up next, Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing the TSX and U.S. markets trade mildly lower today. That does, however, follow some nice rallies yesterday on both sides of the border. With respect to the TSX, we are seeing technology stocks leading the declines, led by Shopify, which is trading down by about 18% or so today following their earnings, which had come in better than expected, but it's the outlook that is disappointing investors. We're also seeing, though, energy shares move higher on the TSX today. This, of course, follows the price of WTI, which is moving higher to the tune of about 2%, following a decline of about 3% yesterday. Importantly, as well, we are seeing the Canadian dollar moving higher against the US dollar, perhaps on the back of the price of oil also moving higher. We are so often viewed as a commodity currency. On the back of that, CAD is higher versus the US dollar. With respect to the markets and what we're seeing in terms of the movements over the past couple of days, it really has a lot to do with Russia-Ukraine headlines. Of course, perhaps the bounce back yesterday was on the back of a reprieve from those geopolitical tensions. However, today we did hear from Secretary of State Blinken saying that there is no evidence of Russia pulling back. So that's why we're in a little bit of this limbo right now. Away from that, of course, economic data is absolutely front and center this week. The US 10-year yield is trading above 2%. And really holding above that 2%. That makes sense given the fact that we have seen US inflation data, PPI in particular, yesterday hit 9.5%. That dovetails very nicely with what we heard from the FOMC minutes today, saying that they prefer an earlier pullback of accommodation. So do be set to see the US Federal Reserve raise rates at the next meeting. Away from that as well, we have seen some very strong retail data out of the United States, beating expectations 3.8% versus 1.8% expectations. So you can see a huge beat. Why is that important? Because it's telling us that the US economy is in fact strong. The US consumer is strong. And maybe that's putting investors at ease that even when the US Federal Reserve raises rates as expected, the US economy can actually handle it. So taken together, it's a positive. We also saw US industrial numbers come in better than expected as well. So it looks as though the US economy is in good standing. The Canadian inflation data came in at 5.1%, the highest number we've seen since 1991. Let's also consider as well, of course, that we could see some supply disruptions from the trucker protest. That, of course, is in certain pockets of the economy. And having said that, we can also look to expect that the BOC will have a liftoff in rates at the March 2nd meeting. Again, given the fact that we've seen continued readings of inflation on the higher side. Also importantly as well, UK inflation readings, I know I'm spending a lot of time on this, hit a 30-year high. Bottom line, it looks as though we're going to have some central bankers around the world raising rates. One other economic data that I think is so important to a lot of Canadians is what we're seeing on the housing front. Home prices hot for sure, up by 2.9% in January. That is the largest monthly reading on record. Away from that, in terms of some stock news to watch, Barrick, ABX is the ticker there, that is trading higher to the tune of about 7% on better than expected earnings. I briefly mentioned Shopify. Their quarterly earnings for the fourth quarter did come in better than expected on the revenue front. And I always like to put this in perspective. They generated $1.38 billion in revenue in one quarter. But the issue for the stock right now, which is trading down by 18%, is their guidance. Stocks always move on guidance. And they are saying that they're expecting slower revenue growth in 2022 versus 2021. But let's also put that in perspective. 2021 revenue growth was 57%. So clearly still a good grower. We also saw TRP or TC Energy, the former TransCanada. They came in with their earnings yesterday, had a couple of downgrades today, Raymond James for one, but they still have a $67.50 price target on the stock, but the stock is trading down by about 1%. A lot of people own those. And we also heard from Smart Center, Morguard, and CT REIT. They also came in with better earnings versus expectations. So certainly earnings are heating up here in Canada. They have been and continue to do so. Mixed results pretty much across the board. One last thing I'll leave you with, the bullish sentiment is on the lower side. But often that is viewed as contrarian indicator. I'm taking as a positive. Nima, back to you.
All right, thanks for that, Catherine. For more analysis and news on the markets, be sure to tune in to Catherine Murray on the Buck Stops here.